Over the past few decades, the gap between the rich and the rest of society has widened at an unprecedented rate. Wealth is no longer just about income. It's about ownership of assets. While a small elite continues to accumulate stocks, real estate, businesses, and other forms of wealth, the majority of people struggle to keep up. This growing divide isn't just an economic issue. It's a structural shift that is reshaping society itself. Consider the numbers. The top 1% of the global population now owns more wealth than the bottom 90% combined. Housing prices in major cities have skyrocketed, making home ownership a distant dream for many. Stock market gains and other investment opportunities are mostly accessible to those who already have significant capital, leaving average earners with limited ability to grow their wealth. Even as wages stagnate, the value of assets continues to soar, further concentrating wealth in the hands of those who were already ahead. This concentration of wealth has profound consequences. It creates a feedback loop where the rich can reinvest and compound their wealth, while the majority remains trapped in a cycle of renting, debt, and limited savings. Opportunities that once allowed middle-class families to climb the financial ladder, owning a home, investing in education, starting a business, are increasingly out of reach. Moreover, this divide impacts more than just finances. It affects access to quality healthcare, education, and political influence. Wealth has become power, and those with assets not only control more of the economy, but also the rules that govern it. As this gap continues to grow, society risks evolving into a two-tier world, a wealthy minority controlling most assets, and a majority left with few paths to financial security. Understanding this growing wealth divide is crucial because it's not just a number on a chart. It's the foundation of the two-tier future that is quietly taking shape today. In the emerging two-tier future, the key factor that separates the wealthy from everyone else is asset ownership. It's no longer enough to earn a paycheck. True wealth comes from owning things that generate more wealth. Stocks, real estate, private businesses, intellectual property, and even digital assets like cryptocurrencies have become the playground of the elite. Those who own these assets can sit back and watch their wealth grow exponentially, while those without ownership rely solely on their labor to survive. Consider real estate, for example. Rising property prices in global cities have turned homes into investment vehicles rather than just living spaces. Families who already own property see their net worth increase effortlessly, while newcomers struggle to enter the market. Similarly, the stock market has increasingly favored insiders. Access to private shares, early-stage investments, and high-frequency trading technologies are mostly available to those who already have capital. For the average worker, investing in stocks remains limited and carries much higher risk. Control over assets also translates to influence. The rich don't just own wealth. They control the mechanisms that create more wealth. Corporations, investment funds, and even emerging AI-driven platforms give them unprecedented power over markets and society. Meanwhile, those without assets are increasingly exposed to the risks of inflation, debt, and economic instability. Their income may fluctuate, but they rarely benefit from the compounding growth that assets provide. This widening gap in asset ownership is setting the stage for a society divided into two layers. One tier, small but immensely powerful, holds the keys to economic growth and decision-making. The other tier, vast and dependent, works primarily to sustain the wealth of the first. Understanding asset control is critical because it shows why the future will not just be about income inequality, but about who truly owns the economy and who remains on the outside. In the two-tier future, technology becomes the most decisive factor in who stays on top and who falls behind. The wealthy don't just own traditional assets. They also control digital assets and cutting-edge technologies that shape the modern economy. Artificial intelligence, automated trading systems, data analytics, and proprietary software tools allow the elite to maximize returns, predict market trends, and even influence global economic patterns. Meanwhile, the majority of people, with limited access to these tools, are left reacting to changes rather than shaping them. The digital divide goes far beyond internet access or smartphones. It encompasses knowledge, algorithms, and platforms that require expertise and capital to leverage effectively. For instance, AI-driven investment platforms can analyze millions of data points in seconds executing trades before ordinary investors even recognize an opportunity. Similarly, emerging technologies like blockchain and tokenized assets are creating new forms of wealth and control, but entry barriers remain high. Those who can afford the training, subscriptions, and early access continue to pull further ahead, while the rest are relegated to traditional jobs that grow more precarious as automation increases. Control over technology also translates into social and political power. Digital platforms determine not just financial outcomes but access to information, influence over public opinion, and even the regulation of economies. Wealthy individuals and corporations wield these tools to safeguard their positions, shaping the rules of engagement in their favor. For the general population, limited access means economic decisions, career paths, and personal wealth are increasingly dictated by algorithms over which they have no control. Ultimately, the technological advantage accelerates the division between the two tiers. The rich amplify their wealth with automation, data, and AI, while the majority struggle to keep up, trapped in a cycle of dependency. In this digital age, ownership is no longer just about money. It's about controlling the tools that generate wealth itself. In the emerging two-tier future, policy and regulation often serve to reinforce the gap between the wealthy and the rest of society. Laws, tax codes, and financial regulations are rarely neutral. They are shaped by those who have the resources and influence to lobby for favorable conditions. The rich and corporations leverage legal frameworks to minimize taxes, protect assets, and exploit loopholes that remain inaccessible to ordinary individuals. Meanwhile, policies intended to protect the general public are often reactive, fragmented, or insufficient to counterbalance systemic advantages held by the elite. Central banks and government institutions also play a role in perpetuating inequality. Quantitative easing, bailouts, and low-interest rates frequently benefit those with existing financial holdings, inflating asset prices and widening the wealth gap. For those without substantial investments, wages stagnate and purchasing power erodes. This systemic design ensures that financial shocks and policy shifts disproportionately favor those already at the top, while the rest bear the brunt of instability. Regulation in technology mirrors this trend. Emerging digital markets, AI, cryptocurrencies, and data-driven platforms are lightly regulated initially, allowing early adopters and tech giants to consolidate dominance. By the time governments implement oversight, the economic hierarchy is entrenched, and the barrier for new entrants is prohibitively high. Even well-intentioned policies often fail because they do not account for the speed of technological advancement, leaving the majority at a disadvantage while a small elite thrives. The structural divide is further amplified by education and access to information. Policies that underfund public education or restrict access to specialized training prevent the majority from gaining the skills needed to compete in a tech-driven economy. In contrast, wealthier families can afford private schooling, advanced certifications, and networking opportunities, ensuring that the next generation inherits both capital and knowledge. Ultimately, policy and regulation are not neutral forces. They are tools that, intentionally or unintentionally, cement a two-tiered system where wealth, influence, and access to opportunity remain concentrated among the few. The two-tier future has profound consequences for society, the economy, and individual lives. As wealth continues to concentrate in the hands of a few, social mobility declines, and the middle class, the traditional backbone of economies, shrinks. Access to essential assets such as real estate, high-yield investments, and advanced technologies becomes increasingly limited, creating a system where only the wealthy can grow their wealth, while the majority struggle to preserve what little they have. Economic shocks, inflation, or market crashes disproportionately impact those without substantial assets, exacerbating the divide. Social and political tensions are likely to rise as inequality becomes more visible and unavoidable. Those excluded from asset ownership may face limited opportunities, restricted economic freedom, and reduced influence over political decisions. This could lead to instability, as governments attempt to balance public discontent with the entrenched interests of the elite. For individuals navigating this landscape, survival strategies are essential. Diversification of income, investment in education and specialized skills, and participation in emerging digital economies, such as decentralized finance and tech entrepreneurship, can provide a foothold in a system increasingly dominated by wealth. Community-based approaches, cooperative ventures, and strategic networking also offer ways to access opportunities traditionally reserved for the elite. Ultimately, the two-tier future demands awareness, adaptability, and foresight. Those who understand the structural forces at play and proactively seek to build financial literacy, skills, and alternative income streams will be best positioned to not only survive but thrive, even as inequality widens and economic power becomes ever more concentrated.